Dear friends of Grey Rhino, very happy to see you once again. So today we'll be talking about are REITs good investments in inflationary period. So for almost a year now, I've been talking about inflation as a possible game changer that can really change how assets are being priced. Which means if inflation were to rise, stocks and many assets could take a beating. And in the last case study, I shared about Capital DC REITs. Just nice, today we can put both together to see are REITs are good investments during inflationary period, such that it could possibly protect you if inflation rears its ugly head. First, let's look at history. Because the last time the world had a major inflationary period was in the late 1970s and early 1980s. If you take a look at this chart, by today's standard, inflation at those times were considered crazy or it was super abnormal. Just look at it. Inflation were double digit for many years, reaching as high as 13%. And in today's context, inflation hardly reached 2%. What was the reason inflation was so high at the time? The incoming president at that time was Richard Nixon, and he inherited a recession from his predecessor Lyndon Johnson. And Richard Nixon, in his fervor to uplift the economy from recession and at the same time to fight the Vietnam War, it took unorthodox monetary policies by huge budget deficit spending. And 2 years after that, because it needs to spend so much money, that it decided to delink US dollar to gold. There are several decades of linked due to the Bretton Woods Accord. So it delinked, so that it allows the US to print money at will. And shortly after these unorthodox monetary experiments, inflation reached, and it reached a very high inflationary period. And the Federal Reserve at that time had to raise interest rates to ridiculously high level as well, reaching as high as almost 20% to combat inflation. So the question was, how did REITs perform during that time, especially versus stocks? So today we'll look at history. From 1971 to 1989, for almost 20 years, this is the chart as you see. The orange line represents S&P 500 and the blue line represents US REITs. As you can see, S&P 500 returned about 1.4% over these 20 years, whereas REITs returned about 7.5% over the same 20 years. For both stocks and REITs, in the initial 2 years, they had a decline of close to 30%. Stocks after that had years of positive and negative returns. However, for REITs, after the first 2 years, every year were positive returns. Which means REITs actually did very well over this inflationary period. And if you look at it, I look at during low inflationary period, moderate inflation and high inflationary period. In low inflationary period, stocks outperform REITs. But when we come to moderate and high inflationary period, REITs outperform stocks. And a big part of it is because of the much higher dividend yield that is available on REITs. And there's also another chart here from Schroders. So you look at the x-axis. The x-axis shows the probability of outperforming inflation. So the more to the right, it shows that this asset sector, has a higher probability of beating inflation. On the y-axis, it shows how much it outperformed inflation. So the higher up, it means it outperformed inflation by a larger percentage. Where did REITs lie? As you can see, REITs lie on the top right-hand corner, which means it has a high probability of beating inflation, and it beat inflation by a large quantum. And this was the data from 1973 to 2020 during inflationary period. So from history, it shows that REITs has been able to outperform inflation. But let's not just follow history, because environment has changed. Hence, let's understand why are REITs able to outperform inflation. One of the main reasons is because REITs has the ability to raise rental. Yeah. And a lot of REITs, in fact, has a rental escalation built into their rental. Yeah. That means every year, their rental will increase by inflation plus a certain percentage. And that gives it a very natural inflation hedge. However, not all REITs are like that. So for REITs that is not able to are not able to raise their rental, I think they will suffer during inflationary period. Hence, I would say that I think in going forward, REITs will still be a good hedge against inflation. However, you got to look at REITs that has ability to raise its price, which means it must be a property type that is in high demand, which I shared the last time. Sectors like healthcare, sector like data centers, I think has the high demand going forward. At the same time, you may want to look for rental escalation clauses that's built into the rents agreements with their tenants. With these two, then I think the REITs will have a high chance of outperforming. Okay, so I hope today's session will help you to gain greater knowledge and greater insights into one specific asset type that can help you to protect against inflation. Hence, till we meet again, I hope you have happy investing and happy learning, and we'll have a prosperous investing together. Thank you very much. If you'd like to be listening regularly to the Grey Rhino YouTube to gain more financial knowledge and also investment wisdom, do subscribe below to the Grey Rhino YouTube channel and remember to turn on your notification.